Welcome to CashFlow Mapping, a new system to help you take control of your finances in a way you never have before. With CashFlow Mapping and the help of your financial professional, you will gain the clarity you need to have confidence in your financial lifestyle and your long-term goals. This system is expertly designed to give you a greater understanding of your finances, making sure you have the best plan that works for you. You can easily see what happens when life events change your cash flow by mapping out different scenarios, like having another kid, selling a business, buying a new car, house, boat, planning for retirement, or anything else that life throws at you. With this tool, you can log in anytime to keep up with your plan and see exactly how major purchases or life events affect your cash flow. CashFlow Mapping has many powerful and easy-to-use features, and we are going to take a brief look at the system and how to get you started, and why investing your time to learn it will be a rewarding and empowering exercise. Let's take a look at the main graphic of a report that you can instantly generate within the system. This is the easiest way to explain all the categories within our system. The first step is to understand your monthly numbers. This is important because people get confused, living in a paperless society that allows debts and credits with little or no effort on your part. Paying bills in your sleep can be an amazing thing, as long as that is part of the plan. By converting everything into a monthly number, you gain clarity, accuracy, and consistency in your cash flow. Let's start with your income from all sources, which your advisor will help you with. You will need to provide them with a pay stub and tax return. Then we will look at savings, separating your long-term savings from your save to spend. This is going to be a key distinction. Long-term savings will eventually replace your paycheck. Save to spend is planning for major purchases. This way, your long-term financial goals, like retirement, will stay predictable, while you can confidently plan for major purchases, like a new house or a vacation. After that, we will separate your expenses into two categories: fixed and variable. Identifying what money is available for day-to-day decisions, like gas and groceries, versus what is already spoken for, like mortgage or rent. Fixed expenses are predictable in timing and amount. These are easy to identify, understand, and plan for. Some items are paid monthly, such as Netflix or insurance premiums. Some are not due monthly. Take property taxes, for example. Therefore, we also convert all your fixed expenses into a monthly number, so you can plan and be prepared for them when they come up. This money may build up in savings, but is not available for other areas of the plan because it already technically has been spent. The reality is that some bills have just not come due yet. Ultimately, we are trying to solve for variable expenses, which are not as predictable in timing or amount. Nonetheless, are priorities like groceries or dining out. This is the area where decisions are made daily. By planning for variable expenses, you can eliminate the unpredictability of daily spending. This also gives you a greater perspective on what is mindless or uncertain spending. Effectively planning for this category helps you be more intentional about where your money is going without constantly worrying about receipts or bank statements. Let's look at save to spend. These are larger expenses that you should save for, like a vacation or remodeling job, or even a contingency fund to smooth over your variable spending. Next, we will plan for the somewhat predictable items, like groceries or gasoline. These expenses are not consistent every day, week, or month, but you probably have an understanding of what you do spend monthly and allows you to allocate funds to it. You can also identify and prioritize items that are important to you. Perhaps you like to go to Starbucks every morning or have a weekly lunch with a parent. You can plan for your lifestyle and hobbies by setting aside an amount for those in advance while identifying other areas where you are overspending. You may find that one of your hobbies is taking an unproportionate amount of your money compared to how much time you actually spend on it. You may realize consistent minor impulse purchases can add up to something major. What is left is the unallocated cash flow. Basically, this is just cash flow that you haven't made any decision on, and you can use this to build or protect wealth, used as a contingency saving for the months that your allocated spending goes over the plan, or spend it freely. Talk to your advisor about unallocated cash flow. How do you feel about the current number? Could you be making better decisions with this money? Now you can confidently create your first cash flow map and take control over your finances in a way you never have before.